Welcome back, folks. How are you all? I hope everyone is cool. Happy Eid Mubarak. In this episode, you are going to learn how to read the price action, which is really so important for being a profitable trader. How to be patient, how to let the price go, how you should not push your button. Everything I'm gonna make clear by this video. It can be little longer, but if you watch until the end, you will learn real trading. That's my promise. So before going to this video, don't forget to push the like button and subscribing to this channel if you are new. Let's start. What should you think before even start your trading day? What is today? So I'm gonna talk about the Monday price action. Monday, basically the accumulation day. That means market will be accumulating, okay, something like this. Not expansion. Look, this expansion. This was the expansion for CPI and FOMC. See, by those type of big news, market didn't expand that much, where here market expanded too much without any news around that area. This is called weird price action. If you ever see this type of weird price action, skip trading. You are not ready to skip trading because you are seeing that market is going higher, going to the moon. You don't want to miss that run. This is the first lesson you have to learn, how to let the price go. No pushing button. You have to learn it. How do you know that when you should not push your button? This is coming by your narrative information or the narrative knowledge. Which day is today? Today's accumulation day. You are not expecting this type of expansion. If you find out this expansion, you don't touch this market. Maybe today is Tuesday, so it should be the manipulation. So you will just expect the manipulation, not the expansion. This type of expansion you will expect in Wednesday and Thursday, sometimes in Friday. But Wednesday and Thursday, you will participate in that type of expansion, but not other days. This is the part that should be knocked to your mind even before starting your trading. Now, in this video, I will explain the price action, how to wait for some kind of specific level and how to change the direction, how you can do that. If you really know that, trading is not that much difficult, trust me, brother. This is Nasdaq 15-minute chart and this is the price action from Monday. I am going to make this video after 4 p.m. That means after the session closed. Okay. This is the morning session. I'm not interested to talk about the London session. Before going everywhere, I would love to mark a line around that area. Okay. This is the standard deviation, -2 standard deviation from monthly chart. So I have analyzed this market, I mean the weekly analysis in Sunday, and over there I told that I will expect some kind of reaction from that area. So around the London session, that was the expansion, the reaction from that area, I was looking for buy. My intention is market will go higher, but for that I need the confirmation. When I have seen this reaction, I don't know how far it will reach. Look at this price action. It's too messy. Now, if you go to your hourly chart, your 4-hour chart, you will see this type of no clean price action over there as well. I'm not going over there, but please go by yourself and you will see the same thing. No perfect fair lookup or nothing. So I'm actually unable to do anything else except this 15-minute chart. In this 15-minute chart, I have taught you already how to mark the last fair lookup and the entry fair lookup. So I'm going to mark the last fair lookup over here. This is my last fair lookup from this 15-minute chart, and let me mark it as a last fair lookup. Over here, I have this entry fair value gap. There is no other fair value gap except this two one. Okay, so this is entry fair value gap. This is last fair value gap. Market is reacting from -2 standard deviation. How far it can reach? Here, you should think that market should reach at least until this last fair value gap. Why? Because you have this sell side liquidity around that area. Mark this sell side liquidity. First job, mark your liquidity. Where is your liquidity? If you see over here, you don't have any buy side liquidity except this all-time high. Except this all-time high, there is no other buy side liquidity. You can say this is your buy side liquidity. No, this is not your buy side liquidity. Let me mark it over there. Here, there is a body. Now, it didn't close above this high, but there is still a body. So, it's not called shallow run. If it was a shallow run, I would say that this is my obvious liquidity, but this is not a shallow run because there is a body above that buy side liquidity. So, this is not my buy side liquidity. I have only this all-time high that is called buy side liquidity because this is all-time high. Below here, you have this clean, perfect sell side liquidity around that area. This relatively equal lows. At the time of 9:30, where our real trading starts, around that time we had this sell side liquidity, this low and that low. They were relatively equal lows. And this fair value gap that was holding the price. Either way, this is just a one leaf fair value gap. Okay, so I am not marking it like by a specific name because this is just a one leaf fair value gap. There is no other fair value gap. You can mark it as a last fair value gap if you want. What happened? After taking all of these highs, all of this buy side liquidity over there, reacting from -2 standard deviation, market went lower, gave you market structure shift, trade this fair value gap, went lower, retrade this fair value gap, then it went lower, take this sell side liquidity. I outlined two trades in a row over there from 1 minute chart, and I showed you how to take entry around that type of situation. Then market reached until this entry fair value gap. When it reached to this entry fair value gap, what happened over there? This low has taken by that low. Okay, let me just put it over there. This low has taken by that low with a shallow run. Why? What should you do? You should mark this low as your sell side liquidity because this is called obvious liquidity. Either way, if you just mark this low, then this low and that low, they will be the sell side liquidity as well, relatively equal lows. Okay, either way, you have the sell side liquidity. Then market started to go higher. When it reached to this fair value gap, what should you do? You should look for sell again. Why? Because you have this sell side liquidity. Now, your thinking should be that market will reach at least until this last fair value gap because this entry fair value gap has traded already. Constant encroachment rejection, tap to this top of this fair value gap, went higher. That means it has done its job. This fair value gap has done its job. I outlined those fair value gaps specifically. So I am telling you the rules which you should follow. Sometimes market is not going to listen, but trust me, in that type of situation, you are not going to be hurt. If you follow every single rules, you are not going to be hurt by the market because market won't give you the setup. If market really doesn't want to go lower, it's not going to give you the setup. You have to believe the market. Market will tell you the real story. Let's go step by step. When I'll be in the next point, it's gonna be much more clear. When price tap to this entry fair value gap again, as I was not thinking that market is going higher, so I am unable to look for buy from there. I am just unable to look for buy from there. When I can look for buy, I told that if this fair value gap is broken, that means a candle will close above this fair value gap and then it will make another bullish fair value gap. If you find a setup which is going to happen above the constant encroachment of this fair value gap, you will take that setup or that buy from 1 minute chart. Other than that, no buy is valid until this fair value gap is not broken. How beautifully it is holding the price. See, 1, 2, 3 times. it hold the price, send it back lower. Here I was thinking prematurely that market is going to take this sell side liquidity and it will reach at least until this last parallel gap. Then market, if it is overzealous, it will take this sell side liquidity. At the same time, when market will be here, I will start to look for sell. I will go to look for buy when and if, only if this is broken by 15-minute chart, then I will start to look for buy. So here, what you are going to learn, how to change the direction. I am looking for sell, but if this thing happened, I will start to look for buy. Keep that in your mind. At the same time, I know today is Monday, so I'm not expecting this type of huge run. Instead of that, I will be very limited. Even if I am able to take a buy from there, I'm gonna close my trade as soon as possible. Okay, maybe 15 handle, 20 handle, 25 handle, whatever it is. But I'm not gonna expect that market is expanding like that way. Can market do it? Absolutely, market can do it. But it's weird. It's not natural. You have to believe it. You have to understand this part. Lot of beginners don't understand this part. That's why some days they are profitable. Then other days they are going to take a lot of losses. If you still look for buy from here, that means you are doing something wrong because you are just going against the price action. What is price action? The price is telling you that I'm going to take the sell side liquidity. Let me remove this one. By this fair value gap, I'm gonna price is going to be hold over there. Then it's going lower to take this sell side liquidity. Then this fair value gap, maybe this will give you some reaction. Then market will take this sell side liquidity. Or if it is accumulation day, as it was the accumulation day, so this last fair value gap will hold the price. Market will come here one more time. It will stay over there. Then it's gonna be a perfect accumulation day. This is how you should start to think. You can't look for buy over here, but brother, it went higher and you are wrong. No, I'm not wrong. I'm just not wrong. The reason is I know what is going to happen today because of my previous history. Sometimes market is overzealous, market do this type of things, and in that type of situation, I'm not gonna touch that market. This is called price action. This is called keep patient. You have to be patient for being a consistent profitable trader. All of the things I'm telling you over here, it's very important, extremely important. Don't avoid those. My request to all of you, if you are a beginner, if you are struggling for being a consistent profitable trader, this is the video for you. If you watch this video, take the notes from here and then keep following them. I promise you, brother, you will be the profitable trader. There is no one who can stop you from being profitable. So no buy setup is valid over here. You will look for sell only. If you find out any sell setup from 1 minute chart, you will go for that sell. If it doesn't work, you will say a perfect setup just didn't work. If there was a perfect setup, when I will be in 1 minute chart, I will explain that. Don't worry, okay? So market came here. I'm not looking for buy. I'm waiting to see if market give me a sell setup from there or market can close above this fair value gap. So when market has closed above this fair value gap, what I'm going to mark? The bullish fair value gap. Now I have changed my bias. Why? Because this fair value gap failed to hold the price. Then I will mark the bullish fair value gap and I will wait to price come to this bullish fair value gap. And from 1 minute chart, I will start to look for a buy setup. So let me mark this bullish fair value gap. And I'm going to change the color so that later when I will be in 1 minute chart, you won't get confused, okay? When I'll be in 1 minute chart, I will explain the price action over here and I will show you that if market is not interested to fall, it will never give you the setup. So you will be you can easily avoid the losing trade. And when market will be, it will come back again to this bullish fair value gap. I will show you how to look for buy setup. Now I am going to 1 minute chart. Don't forget those lines, okay? Those fair value gaps just. So here When market came for the first time to this entry fair value gap, it has been rejected from that entry fair value gap. So it's not a random reversal. It has been reversed from the entry fair value gap. Though I wasn't expecting that it happened, but it's not wrong. It can happen, right? What happened over here? Was there any buy setup? For a lot of you will say, brother, there was that buy setup, maybe there was a bullish breaker. Maybe you were seeing this is your market structure shift, or that is your market structure shift. Then price come to this last fair value gap, then market went higher. No, it's not the setup. If you take up your buy from this fair value gap, for example, you have taken your entry to this fair value gap here. So to this, specifically, I'm talking about this fair value gap where it is going to be your stop loss at least below this low, 28 handle. It's not immediate reaction. This is not a setup. This is just a price action. Look over here. This is just a price action. You don't need to look for this type of setup. This is just some kind of price action. You are not ready to let them go. That's why you are forcing market to give you a setup that is invalid. When price came back again to this bearish fair value gap, I will start to look for sell setup. Was there any sell setup? Absolutely not. There was no market structure shift, no fair value gap, nothing. Then market has finally made a swing low which is valid for shifting market structure. I got the market structure shift. Still, this is not a displacement, but even if that is a displacement, this is the fair value gap. How many candles market has taken to reach over there? One, 2, 3, 4. It has taken 4 candles to reach over there. It's not called the immediate reaction. What I have done for you guys, I have made lot of rules that is gonna help you to avoid the losing trade. This immediate reaction is one of them. Over there, I specifically told you that you should wait for 3 candles. Even if it is 4 candles, no, it's not a valid setup for you. So you have to follow those rules. If you follow those, trust me, you are going to be benefited. Every single time market is gonna give you sell setup, buy setup. How you are going to use them? By this fair value gap, by the liquidity. You are going to use those by your fair value gap and the liquidity. Here you are not looking for buy. In this price action, you are not looking for buy. You are only looking for sell. There is no sell setup. Look at this price action clearly. There is not even a single sell setup. Then finally market closed above this fair value gap and made this bullish fair value gap, right? So I'm going to remove this fair value gap. Oh, by the way, when market closed above this fair value gap, are you going to sell now? Are you looking for sell? But because market has taken this high over there, now market has taken the buy side liquidity, I'm going to look for sell. No, you are not looking for sell now, because you know if market wanted to go lower, then this fair value gap should not be broken. When it's broken, market has made another bullish fair value gap. Now I should keep looking for buy. How far? Not so far, because today's Monday. I'm not expecting huge price action. Instead of that, if I find out any buy setup, I will take that buy setup. I'll close my trade as soon as possible, because market can reverse anytime. This is called accumulation day. So here I'm now going to remove this fair value gap. Are you guys getting my point? Let me go a little further. Now this is that new bullish fair value gap. Now you are looking for buy. Now you are not looking for sell. So you are not seeing this. Market has taken the buy side liquidity over there. This is a perfect market structure shift over there. See, this is a market structure shift. A very immediate reaction to this fair value gap. You are not now looking for sell. Now the guys who actually took the buy over there, they didn't read the price action. They are just depending on the setup. They will push their button over there as well, because they are seeing market has taken this all-time high, relatively equal highs. Everything has taken. Then market has taken these highs. Finally, market has given them the market structure shift. If you want to mark this one, no problem. If you want to mark this one, no problem. Both of them are valid for shifting market structure. Market has structure shift happened. This is their fair value gap. Maybe they are listening this part of mine. Immediate reaction. Brother, I got my immediate reaction over there. But why it didn't work? Market keep going higher. Because they are not depending on the price action. They are not reading the price action. What they are doing, they are just depending on the setup. So you can't just depend on the setup. Here, this is not setup, sell setup. This is actually liquidity taken. Because you know, if market wanted to fall, it should fall from that bearish fair value gap. But when it closed above that bearish fair value gap and made this bullish fair value gap from 15-minute chart, now market is going lower to trade this bullish fair value gap. After trading this bullish fair value gap, market will keep going higher. You know that beforehand. This is how I make the direction, and I'm almost every time I'm 100% sure about my direction. This is how I make it. What do you see? This run, it has taken all of this liquidity. Where did it trade? Didn't I teach you this? Last fair value gap. It tapped to this last fair value gap. I don't think so. It tapped 100%. Okay, it didn't perfectly, but it was very near to this last fair value gap. At the same time, there was the entry fair value gap. Now, when market, this is actually so messy price action, I thought that it tapped to this last fair value gap. Now, it didn't tap to this last fair value gap. It missed it for maybe one tick. It's applicable. This is applicable. Why? Because market has already in the 15-minute bullish fair value gap. If it could tap over there, it could be more, more confirmation. Then market went higher. When it went higher, was there any fair value gap, brother? No. Price came back again, went higher. What is this time? This is the lunch hour. You had no way to take the buy from that area. Why? Because this is lunch hour. You have waited for this situation, and when this situation created, you are unable to take the buy setup from there. The reason is you want to follow this ICT concept perfect way. You know that no entry is valid around the lunch hour. So you didn't participate in this price action. Either way, there is no fair value gap as well. Actually, no perfect fair value gap, even no perfect market structure shift. So there is no setup. You knew that market will go higher, but you didn't get any setup. So what you are going to do? You are going to chase the price. The beginners will do this. You want to be a beginner or you want to be a professional trader. If you want to be a professional trader, then you have to let it go. Today is Monday. You should let it go. You don't know when market is going to reverse. Is it expected? No, it's not expected. Don't worry, I will explain this one as well. I have outlined in my Twitter. I will talk about that as well. So around the lunch hour, you can see this is the lunch hour, end of the lunch hour. So around that area, one. Okay. So here, this is the end of the lunch hour, 1 p.m. Our PM session has started. So what do you see in this PM session? I was watching this price action, to be honest. When I have seen this big expansion over there, I was trying to take a buy from the PM session. Market went lower, take this liquidity, tap to this entry fair value gap over there. Very nice market structure shift, except the fair value gap. There was no fair value gap, brother. There was a breaker block, low, high, lower low. This is the breaker block. I'm not gonna use this breaker block. Why? Because this run didn't work over here. I have a lot of fair value gap is kept open over there. I'm not gonna use this breaker block. This is not the rules which has made over there. Now you can see this breaker block perfectly hold the price, send it back again. I missed it. I don't care. The reason is this is not rules based, and I'm not expecting it is going to do that. I just let it go. I tried to force the market to give me an entry. Market didn't give me that. I didn't participate over here. I didn't do anything over there. Some people will come and they will tell, brother, there was a perfect ICT setup, breaker block. You don't know what is breaker block. I know what the breaker block is. I know better than a lot of you. But this is not rule based breaker block. I'm I'm not gonna use this as a hindsight, and I'm not gonna tell you, brother, see, this is a breaker block, take your buy from that breaker block and see the reaction from that. Yeah, it worked perfectly. It worked perfectly. It used that breaker block perfectly. But I am not gonna anticipate that is going to work. I'm not gonna anticipate that. Instead of that, I would love to wait for the 22 YD model. Now, is it good? Absolutely not. You can't do that. Why? Because today's narrative. What is today? Monday. It should be accumulation. It has already explained too far by the lunch hour. So it should fall now. You know that beforehand. So this entry is also not valid. Market even didn't give me any opportunity from 22 IT model. No opportunity. I am unable to take that buy. Then market is keep going higher. If you look for some buys, maybe you will be able to frame some setup, maybe. But this is the differences between you and the professional trader, between me and the consistent profitable trader. This is the difference, because they are not going to touch this market. They are going to let it go. They know Monday is not this type of expansion. They are not expecting in Monday. Instead of that, they are expecting some kind of accumulation day in Monday. Do you understand the difference, brother? You are not ready to accept that part. You want to participate in this price action. Even me, trust me, brother. After all of these days, after getting beaten by the market again and again, I was trying to force the market to give me a setup over there. See the psychological problem over here? We people are struggling with our psychology. And when I didn't push my button, now I didn't feel that, but maybe you will feel like that. Oh man, that was breaker block. If I could push my button, I could catch that run. This is going to destroy you. So you have to tell yourself, this is not perfect price action in Monday. I'm gonna let it go. Tomorrow is gonna be a better day for me. Maybe not tomorrow. The day after tomorrow is going to be much more better. If not, then maybe next week, maybe next month. It's gonna be better for me, and then I will participate in this price action. I'll be profitable from this market. But here I'm not gonna touch it. I'm not gonna take buy. I had the only opportunity to take buy from here. I missed it. I'm not gonna touch this market, not anymore. Finally, market reach here. There is some standard deviation or something. I'm not interested to mark them, but there was some standard deviation. If you are with me in my Twitter, you already know that. Finally, market reach over here. Let me mark this constant encroachment. This week constant encroachment, where the body closed above the constant encroachment of that week. Though it's a fake breakout, I don't care. I just don't care, because it closed above the constant encroachment. I'm not gonna believe that market is going to fall. What should I do over here? I should wait for making a bearish fair value gap from 15 minutes. Now you can see market has made a 15-minute bearish fair value gap over there, right? Remember what did I say? When market will close above this bearish fair value gap, if it can make a bullish fair value gap, I will be interested to take buy from that bullish fair value gap. This is the rule you can't avoid. After a big expansion, you always have to wait for making a very brand new bearish fair value gap. Vice versa, if market fall and come very far, then you have to wait for a bullish fair value gap for making a bull setup. Without this 15-minute bearish fair value gap, no entry is valid over there. Just no entry is valid over there. So keep that in your mind. There is no bearish fair value gap until that one. So I'm coming here in 1 minute. So here I'm going to remove this one because it was on the outside of the session, I guess. So I'm not interested to mark that one. What happened around that area? If you were with me in my Twitter, when market started to go higher, I told that this all the buy side liquidity which has taken. Go and check my Twitter, brother. I tweeted every single time and I told that, are you going to take that sell? I marked this low as my market structure shift. I showed you the draw on liquidity in my Twitter, not hindsight. When market was creating them, I was marking them with the market. That was the drawn liquidity. I have taught you what is drawn liquidity, right? I have taught you everything. This last fair value, what is that? Last fair value from where? 1 minute chart. Market reach until this last fair value. Look how the constant encroachment of this last fair value gap reacted. I taught you this as well in my YouTube channel. How should you believe that market is going to fall? If it really would love to fall, it's not going to work with the upper portion of this fair value gap. How beautiful that is. Then a very nice displacement. Now, when you got this displacement, was there any fair value gap? No, there is no fair value gap. Are you going to take that sell? You should not take that sell. Maybe there is a fair value gap. Just for example, maybe there is a fair value gap. Are you going to push your button over there? No, you are not going to push your button over there. But brother, I was waiting for this sell setup for so long. I missed every kind of buy setup over there. There was a lot of buy setup. ICT concept is buy setup, but I didn't take any buy over there. Now I was waiting for a sell and market is almost end. So you can see here it's 335. So near about 335. It has made this sell setup. It is logical. Market has taken all the buy side liquidity, tapped to this last fair value gap, even didn't work with the upper portion of this fair value gap. This is a perfect market structure shift displacement. I have this relatively equal lows around that area. I have this relatively equal lows here. Maybe there is a fair value gap. Just for the sake of this video, maybe there is a fair value gap. Are you going to take that sell? No, you are not going to take that sell because there is no 15-minute bearish fair value gap. After this big expansion, how can you believe that market is actually going to take this sell side liquidity, is not going to leave it and it's keep going higher? After taking this low, it's using as a liquidity take and market is going higher again. How could you know that? You can't know. You don't know that. This is called price action. This is called to let the price go. This is called the psychology. Every single one of you will tell you, brother, work with your psychology. How do you work with your psychology? This is called working on your psychology. You will let every buy setup go. Then when at the end of today, finally you have got a perfect setup. Just for the sake of this video, just think there is a fair value gap. Okay, and it's an immediate reaction. You got your fair value gap. You have this clean sell side liquidity. You are going to push your button over there and maybe your stop loss is going to be here, for example. Okay, and you are going to target this sell side 25 handle. Brother, it's a huge nice setup. Everything is perfect. No, you can't take this entry. This is called working on your psychology. Work with your psychology, brother, because if you build this type of habit where you are going to break some rules, trust me, in a longer term you are gonna be a loser. You wanna be a loser? Just one day, brother. Today is just one day. You are going to let it go. Why this type of weird price action? Wednesday we have a holiday, bank holiday, so market is in rush to make something before Wednesday. That was the reason, but it was unexpected. We are not going to participate in this price action. Simple logic. This is called psychology. This is called real reading price action. This is called how to let the run go. This is called how to change your bias. How you can change your bias. Remember, first I was looking for sell, then I changed my bias. I started to look for buy only over there. This is called waiting for the perfect setup, what is called patience. This is everything, brother. This is trading. This is real trading. Whatever you are doing, it's not trading. Where market to reach? Let me check. I can say you that it has reached to the last fair value gap. So just let me mark it. To that specific leg, see this leg? Is there any other fair value gap? Can you show me that any other fair value gap except this one? What is that called? What is this fair value gap called? I have shown you that. You have already all the information, but you are just not ready to let this run go, to let this setup go, because you are in rush. You are thinking that I have been waiting for whole day to take an entry and finally I have found it, so I'm not gonna follow every rules. Instead of that, I'm gonna participate in this price action. Today you are lucky, tomorrow you won't be lucky, and tomorrow you will blow your account. You wanna do that? Do that, brother. I have no problem. I'm trying my level best to teach you the price action. This is called price action. To depend on the higher time frame, to execute your trade from the lower time frame, how to change the bias, how to be confident with your bias. This is how you should do that. When market reached to that last fair gap, so there was the last fair gap. I'm just randomly marking the last fair gap from 15-minute chart, okay, just for your understanding. When there was a last fair gap and market was actually, I was expecting that market will take this sell side liquidity. Was there any sell setup? No, there was no sell setup. I didn't participate in this price action. Am I a loser? No. I took entry over here. I outlined that in my live streaming. How beautifully I outlined that, brother. Step by step, even before making this order block, even reaching until that last fair gap, didn't I mean outline those setup over there? That was called price action. Do I need to take that all of this entry? No, I'm already profitable over there. I'm just done with my price action. So this is how you should keep reading the price. If you can do it, you will be a profitable trader. If you can't do it, trust me, you will be the same area where you are right now. You will be here for the last day of your trade. So try to improve yourself, brother. Be a profitable trader. Make us proud. Be independent. I mean, get your freedom, financial freedom. That's my request, humble request, brother. So that's all. If you think that's insightful for you and it's helping you for being little, improve, it's actually giving you any improvement, don't forget to subscribe to my channel. Don't forget to give me a thumbs up. So until the next video, cheers.